On April 2, 2025, the world watched as President Trump ignited a global trade war. He announced sweeping tariffs on a vast range of imports. These tariffs, he claimed, would protect American jobs and reduce the trade deficit. The impact was immediate and far-reaching. The new tariffs targeted both allies and rivals. A baseline 10% tariff was imposed on all imports effective April 5th. This was just the beginning. Country-specific tariffs effective April 9th added another layer of complexity. China faced a staggering 34% tariff on top of existing ones. This brought the total to over 50%. The European Union faced a 20% tariff. Japan, India, and South Korea were hit with tariffs of 24%, 26%, and 25% respectively. Even countries like Taiwan, Vietnam, and the UK were not spared. They were slapped with tariffs ranging from 10% to 46%. Canada and Mexico, while exempt from the new tariffs, remained subject to existing tariffs on steel, aluminum, and automobiles. The scale and scope of these tariffs were unprecedented. They signaled a dramatic shift towards protectionism. The world braced itself for the inevitable fallout. The reaction in global markets was swift and brutal. On April 3rd, the S&P 500 plunged by almost 5%, its worst performance since June 2020. The Dow Jones Industrial Average tumbled by 3.98%, and the tech-heavy Nasdaq plummeted by 5.97%. Panic selling gripped investors as they grappled with the uncertainty unleashed by Trump's tariffs. Asian markets mirrored the fear and pessimism. The Nikkei index in Japan experienced a significant drop. Across the globe, stock markets flashed red. Wall Street endured its worst one-day fall in 5 years. It was a clear sign that the investors viewed the tariffs as a serious threat to global economic stability. The tariffs sent shockwaves through various sectors. The auto industry, heavily reliant on global supply chains, faced disruptions and rising costs. Tech companies dependent on imported components worried about shrinking profit margins. Even consumer goods from groceries to beer were expected to see price hikes. The tariffs' impact went beyond immediate market fluctuations. They injected a dangerous dose of uncertainty into the global economy. Businesses facing volatile costs and disrupted supply chains put investment decisions on hold. Consumers, worried about rising prices and potential job losses, tightened their belts. The global economy, already grappling with multiple challenges, was suddenly facing a new and significant threat. The international community's response to Trump's tariffs was one of defiance. Countries refused to be bullied into submission. Instead of caving in, they prepared for a protracted trade war. Retaliatory measures were swiftly announced, targeting key American exports. China, the primary target of Trump's tariffs, responded with a forceful condemnation of self-defeating bullying. Beijing wasted no time in announcing its own set of retaliatory tariffs on American goods. These tariffs, strategically targeting American industries and agricultural products, were designed to inflict maximum economic pain. China also hinted at other measures, including currency devaluation and export restrictions, signaling its readiness for a long fight. The European Union, while pursuing negotiations, made it clear that it would not back down. French President Macron urged European companies to suspend investments in the US, a move designed to send a strong message to Washington. The EU also prepared its own set of countermeasures, targeting American products with tariffs. Canada, despite being exempt from the initial round of tariffs, took a firm stand. Ottawa announced a 25% tariff on non-compliant US vehicle imports, demonstrating its willingness to protect its own interests. Mexico, while avoiding tit-for-tat retaliation, focused on boosting domestic production and reducing its reliance on the US. The economic fallout from the tariffs is predicted to be significant and long-lasting. Economists warn of a global recession triggered by reduced trade and investment. Consumer prices are expected to rise as tariffs increase the cost of imported goods. Businesses facing higher costs and reduced demand are likely to scale back investment and hiring, potentially leading to job losses. The tariffs have also injected a dangerous dose of uncertainty into the global economy. Businesses are hesitant to make long-term investment decisions in the face of unpredictable trade policies. This uncertainty could dampen economic growth for years to come. The tariffs represent a significant setback for the rules-based trading system that has underpinned global prosperity for decades. By acting unilaterally and prioritizing protectionism, Trump has undermined the WTO and other international institutions that promote free trade. This could lead to a fragmentation of the global economy, with countries forming regional trading blocs and engaging in tit-for-tat tariffs. The long-term consequences of Trump's tariffs remain to be seen. However, one thing is clear: the world is on edge. The tariffs have ignited a trade war that threatens to damage the global economy and undermine international cooperation. It is a gamble with potentially devastating consequences for everyone involved.